Welcome to this Bankers Interim Update. Bankers delivered a solid 6 months, despite choppy markets with global tensions, rising prices and rapid advances in AI creating some uncertainty in some sectors. Even so, markets held up actually very well, with the strong company results helping shares recover to new highs. This was led by the US market, but also technology and memory companies. Share price total return was 6.5%, outperforming the benchmark FTSE World Index, which rose by 5.5%. The net asset value total return was 3.7%, slightly below the benchmark. Finally, the dividend, we declared a second interim dividend of 0.707 pence, which is actually a 3.1% increase over the year. And now Richard will talk about some of the performance drivers for the trust.
In terms of the drivers of performance, the key sectors were technology, unsurprisingly, given some of the AI optimism, and also energy, just given some of the events in the Middle East. Within technology, very bifurcated. So obviously semiconductors, performing very well. We always talk in bankers about following the cash flow. Well, there's a generational shift of cash flow from the hyperscalers spending that AI capex to the semiconductor companies, and we own plenty of the beneficiaries of that, whether it be memory companies like Micron, semi-cap equipment makers like an Applied Materials, both names that we added through some of the changes in the US sleeve when I took over back in October, but also globally. So MediaTek and TSMC in Taiwan were also key performers in the portfolio. On the energy side, some of our names like a Total Energies here in Europe. So it really was a kind of very global sort of performance in terms of some of those key contributors. And then on the flip side, some of our negative contributors were very much in that sort of disruption bucket, or at least perceived by the market. So some of the software names that we owned, even though we tried to be very selective in cybersecurity or in data infrastructure, those names are often owned in ETFs or in baskets, and they're just sold all together in a uniform basis. That creates opportunities, but in the near term, that can lead to volatility in those stock prices. And again, even more broadly beyond software, we've seen impacts of perceived disruption in some of the internet platforms, Spotify or a Netflix, as well as even an insurance broker like an Arthur J. Gallagher that's potentially could be disrupted by agentic AI. Again, we think that demonstrates a misunderstanding of the franchises of these companies, how these industries work, and ultimately how AI is going to be used in some of these industries. And again, we want to stick with those stocks through that, but there will be near-term volatility as many investors seek to kind of sell first and ask questions later. And that leads into some of the changes we've made in the portfolio. Obviously, we started this period with some of the changes that we've made in the US sleeve as I came on to manage that. And we've just generally been on a journey of unifying that portfolio and bringing down the number of sleeves, increasing the conviction, bringing down the number of stocks. And during this period, we took the next step in that journey, which was to remove the sleeves completely and unify that portfolio into one global portfolio of the high conviction ideas from all of our investors globally at Janus Henderson, and retaining that local and regional expertise from Junichi in Japan, SAT in Asia as well. And that allows us to unify not just the stocks and from a risk management point of view, but also from the trends and themes that we're trying to take advantage of and create those investment opportunities for us globally. So we've completed that step at the end of this period, and that will be kind of going forward. We'll have around 70 stocks, which will reflect many of our high conviction ideas from around the globe.
So in terms of our outlook, looking ahead, we expect markets to remain somewhat volatile, particularly the backdrop in the US market and obviously tensions in the Middle East. By the time you watch this, I'm sure things will have changed yet again. I think we still do believe, though, that all parties want to negotiate a sort of resolution, and therefore hopefully that can shift us to lower inflation and start to talk about interest rates being cut rather than, as we're seeing, central banks starting to raise rates. And that's important, I think, for the equity market. However, when we look really at companies, and companies is what we own in the trust, corporate profits are continuing to grow, which is supporting the markets and share prices. Having said that, obviously share prices back to their high levels, new highs in quite a few markets, and therefore we're mindful of valuations given that. There are some risks of over-exuberance in certain areas. So our focus remains really right on looking at the right companies to own, where profits are going to grow, where cash flow is supporting those profits and their capital expenditure plans, and really trying to navigate that over the long term. And finally, I'd like to announce that it's time for me actually to hand over the baton of managing Bankers Investment Trust to Richard. I've been very lucky to be associated with the trust for actually 25 years, but 23 years of managing it, being its lead manager, and it's been a great honour to be part of Bankers' 138 years of history, and I've seen a lot of change in investment markets and a lot of challenges in that time, but we've weathered them very well. The trust has grown from sort of 200 million to nearly 1.5 billion at one point, and delivered 11% annualized return. So very proud of what I've delivered and how I've represented the trust, but very much I'm looking forward to staying as a shareholder and seeing how the future unfolds with Richard as lead manager.
And maybe that gives me the great honour of being able to, I think, say thank you from myself personally, having worked with you for the last 12 years. Thank you, I think, from all of our shareholders. You just laid out, the great returns over the last, 23 years, and also from our board in terms of everything that you've done for Bankers. As you say, 138 years of history. There's some great chapters in that, and you've written, a great chapter there over the last quarter of a century. And again, I'm very honoured to be able to take that forward, and appreciate your trust and confidence in choosing me.
Great, thank you, everybody.